Hi all. Today we are going to discuss about the public revenue. As we know that it is one of the important branch of public finance. It deals with the various sources of income from individuals and organizations. These sources include income from taxes, commercial revenues in the form of prices of goods and services supplied by the public enterprises. And it also include administrative revenues in the form of fees, fines, and gifts and grants. The income of government through all sources is known as public revenue. Professor Dalton defined public revenue in two senses, narrow sense and wider sense. In the narrow sense, it includes income from taxes, prices of goods and services supplied by public sector undertakings, revenue from administrative activities such as fees, fines. In the wider sense, it includes all the income of government during a given period of time, including public borrowing from individuals and banks. Source of public revenue. Public revenue generally refers to the government revenue. Some important source of concepts that include public revenue consist of tax, fees, and etc. The main source of public revenue are tax and non-tax revenue. The tax revenue, the chief source of public revenue is tax. Tax is a mandatory imposition of duty on public by government to meet requirements of general public as a whole. Therefore, a tax is a compulsory duty levied by the government. If any individual refuses to comply with the tax payments, he can be punished or penalized. A tax is basically involves some understanding and sacrifice on the basis of a taxpayer, and a tax is a duty and not a penalty. Most part of revenue income is generated from tax by the central government. The major sources of public revenue, Professor Dalton defined taxes are compulsory payments to the government without expectation of direct return to a benefit to the taxpayer. The revenue from taxes came from three main sources: tax on income, taxes on wealth and property, and taxes on commodities. There is a broad classification of taxes. It includes direct and indirect taxes. Direct taxes means it is a levy. Direct taxes are levied on wealth and income of individuals and organizations. These taxes are personal income tax and corporate tax and gift or wealth tax. The impact of direct taxes is on the same person, whereas the indirect taxes are imposed on goods and commodities, and its impact is levied on the different people. These taxes include sales tax, excise duty, service tax, customs duty, VAT, and GST. There is a classification of direct tax and indirect taxes. On the basis of meaning, we can see that direct tax is the tax that is levied by the government directly on the individuals or corporations, and in the case of indirect tax, the tax that is levied by the government on one entity, but it is passed on to the final consumer by the manufacturers. In the case of incidence, the incidence and impact of the direct tax fall upon the same person, whereas the incidence and the impact of the tax fall upon the different persons in the case of indirect taxes. The income tax, corporation tax, and wealth tax are the examples of direct tax, whereas VAT, service tax, and the recently introduced GST is an example for the indirect tax. In the case of nature, they are progressive in nature in the case of direct tax and the regressive in nature in the case of indirect taxes. The major objective of the direct tax is both social and economical. Social objective of direct tax is the distribution of income. A person earning more should be contribute more in the provision of public services by paying more tax. This provision is also known as progressive taxation, and in the case of indirect tax only economical. When an indirect tax is levied on a product, both the rich and poor must pay the same rate. A person earning 10 lakh a month pays the same tax on the wheat purchase as the person earning 3,000 rupees a month. This principle is called regressive taxation. When considering the impact of a tax, it is not at all inflationary in the case of direct tax, but in the case of indirect tax, it is a inflationary. We see that there is tax revenue and also non-tax revenue. The commercial revenue, administrative revenue, and gifts and grants are the major non tax revenue. And the commercial revenue means income earned by public enterprises by selling their goods and services. For example, payment for postage, tolls, interest on borrowed funds, etc. They are also known as prices because they come in the form of prices and goods and services provided by government. Administrative revenue, the receipts of income acquired on account of performing administrative functions by the government are called administrative revenue. And the special assessment fees, fines, and penalties are the examples for the non tax revenue.